From data rails, this is FP&A Today.
Hello, everyone. Welcome to a brand new FP&A podcast. I am your host, Paul Barnhurst, aka the FP&A Guy, and you are listening to FP&A Today. FP&A Today is brought to you by Data Rails, financial planning and analysis platform for Excel users. Every week, we will welcome a leader from the world of financial planning and analysis and discuss some of the biggest stories and challenges in the world of FP&A. We will provide you with actionable advice about financial planning and analysis today. This is going to be your go-to resource for everything FP&A. I am thrilled to welcome today's guest on the show, Cameron Janke Cameron. Welcome to the show.
Thanks for having me, Paul.
We're really excited to have you. So let me tell you a little bit about Cameron, and then I'll go ahead and let him do an introduction. But Cameron has spent most of the last decade working for HealthEquity. Previous to that, he worked as a controller and then also worked EY doing some auditing, has a degree from the University of Utah. And he's also earned his CPA and CMA certifications. He's an FP&A veteran, and we're really excited to have him on the podcast today and discuss some of his experiences and some things that we think can help all of you as listeners. So Cameron, why don't you maybe just go ahead and give a little more about your background, tell us a little bit more about yourself.
Sure. Thanks, Paul, for the opportunity to be here and to learn from you as well. I am what I like to commonly refer to as a recovering accountant. But no, all joking aside, I started in accounting. The base knowledge of accounting has helped me immensely in my career and in being a resource, not only from an FP&A perspective, from an accounting perspective, and help bridging that gap. And I started out, as you mentioned, in accounting, auditing, and decided that I wanted to be part of an opportunity to be part of a growth story in a company. And that led me into a lot of different areas, and one being FP&A. And, I've been actively looking for different resources and content to help me improve my FP&A skills and leadership. And, one of those individuals that has helped me along the way has been you, Paul. And I've appreciated your great content and your leadership and just expertise in the realm of FP&A. So I'm happy to be here and have a good conversation with you.
Well, I'm excited to have you, and I appreciate that. And, it's fun to share things about FP&A, and I'm glad to hear it's helped, because that's really, one of the biggest benefits of doing it. So, kind of with that in mind, I think you touched a little bit on, I know you earned your degree in accounting. You started in audit. I think you did a little bit at M&A, and then you made that transition to FP&A. So can you talk a little bit about how you ended up in FP&A and a little bit about how you made that transition?
Sure. So, I look back at my EY days, and I remember being at a client, and all of us in the audit room, we wanted to go talk to the FP&A person because they were way more personable. They were exciting to talk to, and we had to go complete, some of our flux analyses and get explanations on why things were changing, why certain, P&L things that happened that we saw. And I remember us, rock, paper, scissors, trying to figure out who was going to be able to go, which is different in an audit area, because typically, you're scared of the client. You don't want to go ask questions because they don't like auditors of the sort. But when we went and talked to this FP&A individual, I remember just feeling so excited to talk to them and learn from them because they knew so much about the business. So that was a little bit of an inkling of, hey, what is FP&A? I think back then too, it wasn't really defined as much as it is today. And so, I didn't really think that it was a possibility that my background could lead me into that area. But I remember being intrigued by this individual. And so I had an opportunity to be part of a company that was going to do an IPO, which is a company called HealthEquity, and they're listed on the NASDAQ. And I started at a time which was an inflection point for them. They were wanting to go public. They were growing like crazy. I got in pretty early. And so I think a couple factors helped me get into FP&A, make that transition from accounting. And two of them were, external factors, something that I couldn't impact. And those would be, I started at a company that was growing, right? And growing companies provide different opportunities for those that work there. Second was the organizational chart. I wasn't in the controller org. I was reporting into the VP of Finance, and the VP of Finance was owning reporting, and I was an individual that was going to be helping with SEC reporting. And so that was something that just where I was placed in the org really helped me be empowered to go different places. And so if you are in an organization that's growing and you have to wear a lot of different hats and you are wanting to be a good performer, I think you can take on a lot of different responsibilities and learn in a lot of different areas. And that was something that I saw. And I found myself trying to create reports, trying to create external facing documents, and realizing there's a lot of forward looking statements that are placed in SEC documents or investor presentations. And I wanted to know the why behind some of these numbers that I was putting into these filings or investor presentations.
Mm-hmm.
And I started to look more into those numbers and realizing, hey, like I could add some value here. I could create more of a process behind our annual operating plan. I could create more of a process behind our forecasting. And oh, by the way, it seems like the business would like to know more about these numbers, right? That creating that connection between the outlook that a public company would be giving and the actual business to help them have buy-in into those numbers. And so I saw a need and I just started doing it. I remember, no one went and asked me to really go and do these things. I just started one day, had an opportunity, some free time, and I just started building out my own operating plan from bottoms up.
Wow.
Building out my own forecasting from bottoms up, seeing fluctuations in the trend, and then going and asking accounting, hey, what happened here? And as I started doing that myself, what I started realizing is that, I remember there was probably 3 months in, the accounting started saying, someone went to accounting asking a question about the financials. Mm-hmm. And I remember overhearing accounting say, well, Cameron does that. And it wasn't something that was in my job description. It wasn't something that I had been asked to do. But because I had been, taking that initiative, people started recognizing, well, hey, Cameron does that now. Cameron looks at that. Cameron's, documenting some of, the reasons why our trend looks like that. Cameron's, helping with the forecast. And so I think if you just start, you create an opportunity for yourself just by jumping in and helping where you see a need. Eventually, you can go wherever you want in the organization. That's the principle, just a higher, overarching principle. But that's kind of how I got into FP&A is just starting to do it myself.
No, thank you, and I love that. And I mean, it shows the importance of initiative, right? Just going and learning and trying to improve yourself and understand what's going on. It opens up a lot of doors that you may not even realize can be opened, right? I'm sure when you started to do that, you weren't thinking, I'm going to go be the FP&A person. Mm-hmm. I may not even known about it. You're just like, you're trying to understand and be better at your job. And It opened up opportunities. And I think that's great advice for anyone, but especially, accountants, because I regularly get asked on LinkedIn, get, notes and things. How can I make that transition to FP&A? And I think your answer there is great advice to just be proactive, to dig in, to start to understand how the business works. And it will open up opportunities, whether it's FP&A or operations or wherever you may want to be, right? Because everybody's a little bit different when they get into accounting and try to figure out what they want to do next. So I appreciate that answer. So I know you were at HealthEquity for, I believe it was 8 years. And during that time, I know you were promoted several times. And, you were a VP of FP&A there. Can you talk a little bit about that progression through the roles? And how did you make the adaptation from an individual contributor to managing a team? And, what were maybe some of the challenges of making that transition?
Sure. Yeah, I was at HealthEquity for 8 years. I learned a lot, and I loved the experience. And as you mentioned, had a different career path to eventually be VP of FP&A. And a company goes through a lot of different phases. And when you are at a smaller stage company growing a lot, you wear a lot of different hats. And so a lot of my changes in my roles were giving up some hats to other different areas so that I could focus in different, on specific items such as FP&A, but also expanding my responsibilities. So there were a lot of different things that happened, such as M&A transactions that allowed me to get more broad and into the organization and have more responsibility there. So, when you're growing, you need to change the hats that you wear, right? And allow for others to focus in on areas that you need to maybe you weren't as focused in originally, and that would be SEC reporting for me. So one of the changes for me was I was hired to do SEC reporting, and eventually I found myself not giving it the love that it should have been, right? Had gotten. And so, and then focusing more on FP&A, which is where I wanted to be. And so that was one of the changes. And when that change was made, I was given a team to lead and guide through that process, and that was a learning experience for me. I went from an individual contributor to a manager, and something that I think about is it just takes time to learn. I don't think there's a lot of companies out there when you make that change from an individual contributor to a manager that give you, you're not sent to some sort of leadership retreat for 2 weeks and they go through all different types of scenarios. You're learning on the job, right? Yep. And you need to understand that it's going to take time. I think if you are open and honest and vulnerable with the team, they understand that it will take time as well, and they'll give you that flexibility to learn. And so I think being vulnerable and just being open and honest with the team is like, hey, look, we're all in this together and we are going to accomplish some great things, but I might, there might be some bumps along the road where I'm going to make mistakes. And I hope that, you'll give me some leniency as I give you leniency. And so I kind of went in from that perspective of being vulnerable. And I know that there's some, common, big motivational speakers out there that talk about that. And but I found that very successful for me. But, you have some fears as changing from an individual contributor to a manager. And one of those fears that I had was I felt like it was my responsibility to fill the to-do list of the people that I was managing. Right. Mm-hmm. And I quickly learned that, as a leader, that's not necessarily your job, right? Prioritizing those to-do lists would be helpful. Clearing roadblocks is your job, but you don't have to, tell them exactly what has to be done and when it has to be done and fill a full 40-hour work week. So that was a fear of mine, and I quickly learned through that. Something I also, was fearful of was, hiring for the future need. I was very, conscious of the company's funds and realized, well, I don't want to misuse funds, but I saw a future need. And if you just trust in your gut and knowing that, just like any entrepreneur, right, you need to be thinking about the future and what your future needs, and sometimes you need to make that investment, right, to learn to scale. That was something that I learned and had to learn as I was changing from individual contributor to manager. Of okay, I'm going to need this in the future, and I need to overhire for this. And even though the need right now isn't showing right now, we will need it in the future. And that was a learning for me as a leader. And also as a leader, I knew that I thought all the ideas had to come from me, right? But what I realized, and I think it's a Steve Jobs quote, but you maybe don't quote me on that. And I think he said, we hire good people to tell us what to do, right? Mm-hmm. Yeah. And I think that was also a great learning experience for me, is that, hey, it's not solely on your shoulders to come up with all the great ideas, all the things that people need to do. It is your job to prioritize, clear roadblocks, and inspire the team to do good work. And so, I think you can say that to everyone, individual contributor, but most of them are going to have to, as they make the change, learn those principles by themselves. But hopefully, some of that resonated with you, Paul, and if in your experience. I'm not sure, but that's been my experience with
Yeah,
making
no,
the change.
there a lot of great information in there. A couple things stuck out to me is first, being willing to be vulnerable. I think that's really important, helping the team know that, hey, I don't know the answers, or I don't know all the answers. This is new to me too. Let's learn together. So they see the human side of you. I heard sometime, great leaders do hard things in a compassionate way. And I really loved that because they don't let up on the expectations. You want teams to accomplish a lot, but you're taking into consideration the person. And you kind of have to do both those. So the vulnerable made me think about that because that shows the personal side. And then I really liked how you said, at first you thought it was your job to set up their to-do list. Sometimes, the other one you often and that I experienced is you want to tell them how to do everything. And I can still remember sitting with someone on my team and saying, hey, this is how you should do it, and laying it all out. And I could tell they didn't really like it. And I stepped back and said, at the end of the day, here's what the boss has to have. As long as you meet those requirements and as long as it can be reproduced and it makes sense, I don't care how you do it. And that was kind of a breakthrough for me, reminder that it's no longer my project, it's somebody else's. My job is to give the guidelines, like you mentioned, right? Those guardrails help remove the blockers. It's not to do the work.
Yep.
So I appreciate that and can definitely relate to a lot of what you said there in my experiences of going from an individual contributor to managing a team. It's quite the adjustment. So I know while you were at HealthEquity, you went through the IPO experience. I know you first did SEC reporting. What advice would you offer to somebody in FP&A that's in that environment where either they're getting ready to go into an IPO or they're thinking about that? Maybe a little bit about what that was like for you and some things to watch out for, lessons learned, that type of thing.
Sure. It's a good question. If there's one topic that I get reached out to on LinkedIn to talk about, it's this one.
Not surprised.
I've had conversations, of people in the LinkedIn network of just trying to understand what my experience was from an IPO perspective, and the first one would just be, don't worry so much about day one, worry about day two. And what I mean by that is when a company decides to go public, there are so many advisors and consultants in the business, it won't fail to go public, right? You take a step back and you look at how many parties are involved. You will have so many investment bankers, and each investment banker will have their law firm doing due diligence. And then you have maybe outside investor relations firms. You have board members. You have, executive leadership and your own internal team. There's so many people looking at documents and, just the numbers themselves that, follow their lead and do what you need to do. But yes, it is work and it is time consuming, but it is also kind of fun and enjoyable to rub shoulders with such smart people and learn from them. And so yes, day one is fun and exciting and you learn a lot, but day two is really where you need to be thinking about from an FP&A perspective, because all those people go home, right? And then it's on your shoulders, right? And so some things that I didn't realize so much about of a public company would be that the investor and public realm of just being a pub company will take up a lot of your time, right? So from a time management perspective and the capacity planning perspective. So what I was alluding to in the previous comment of, you need to think about if your capacity is already constrained now, and there's going to be, pull on that capacity in the future, you need to figure out, like, how can I expand my capacity? Whether that means letting some things go or increasing your capacity, whatever it might be, there will be additional asks of you. And what are those? So, think about from a perspective of consensus guidance, right? As a public company, investors and sell side analysts, they're talking to management and they're asking management all sorts of questions, and management is going to go on what's called a non-deal roadshow a lot and get in front of institutional investors. They're going to go to different conferences, and their earnings scripts, earnings calls. There's a lot of interaction with the investment community, and your job as an FP&A individual is to make sure that in management knows what the story is, right? And they can speak to the numbers. And do you know your numbers well? That might be like a simple ask, but it does take time, and it does take constraints. It will constrain you because you're putting yourself out there, right? When have you ever had to put your name behind a forecast and sign your name behind it, or whatever it might be, out in the public realm, right? To be reconciled against in the future. So it is something that will constrain you. Consensus and your guidance, you never want to miss, right? So those become your new targets, right? So you might have an annual operating plan that you have been thinking about as you set that once a year or whatever it might be, and your forecast that you do quarterly for the board. Yeah, it's okay to explain variances to the board, but if your consensus from your sell side analysts is higher than an annual operating plan, there's a lot more pressure to meet that consensus than there is to meet the annual operating plan.
Sure.
So understanding that dynamic is key for any FP&A individual in a public company. And going with all that, deadlines are FP&A's world, right? There's so many deadlines, right?
Yes.
So how take a step back and look at your reporting calendar, and honestly think to yourself, what can I cut out of here? How can I give myself more time? How can I give management more time? Because you want as much time to feel confident in your forward-looking statements as you need, right? And so if you have if accounting close is only allowing you 1 or 2 days to really review the actuals and report, you're going to want to think, hey, accounting, how can we shave 1 more day off of this? Or how can I extend this 2 or 3 days? Think about that dynamic just from a reporting calendar perspective, because what happens is then you layer in the IR calendar, right? And Bank of America's conference doesn't care when your company is reporting, right? And maybe someday your management team wants to go to that Bank of America conference. And in order to do that, you might have to report a little bit earlier, right? So you got to be thinking about calendaring and giving yourself enough time to really feel confident in those forward-looking statements.
No, I like that. I like how you talk about giving yourself enough time. But early on, you mentioned, make sure you hit the quarter, right? You don't want to miss your guidance. We all see what happens on the market when you miss your guidance and how much valuations can drop, right? And, it reminds me, I was working for a company and we were exploring going public. We were very close. I remember we were finishing up a forecast and the CFO pulled us all into a room and, kicked everybody else out that didn't know what was going on, and looked at the GM and said, "Are you sure you're going to sign up for this number? You have to hit it. There's no more of this missing if this is what we're going to be doing." And I remember we were disagreeing on how much the number should come down. We were kind of debating, and because I was like, there's definitely some risk to this plan. I had put together and knew it. And so I know you talked about it, known the numbers and just working through that to make sure we didn't 3 months, 6 months, whenever, if it happened, we didn't have a big surprise.
Yeah. Under promise, over deliver is a key principle to live by when giving guidance, right? You want to make sure that you're going to hit that number.
No, I like that. And the second thing I really kind of took away is pushing the things off your plate that you need to and planning your calendar appropriately. And sometimes that's under your control, and some of it is really all about working with others. And that's where FP&A is influencing. In this case, it's accounting. It's going to them and saying, okay, why am I getting this on workday 7? How can we move this up? What are your roadblocks and how do I help enable you to allow me to have the time I need to give management the answers I know they're going to ask?
Yep.
So that's
exactly.
That's really good advice. And it sounds like, one of the biggest things is, knowing the consensus that's out there, kind of what the street talks about, making sure you're working toward that. You're giving yourself the cushion to be able to hit your numbers, that you're working to give yourself the time to be able to answer the questions. So to me, it feels like it kind of buttons up that process and it makes your focus different. There's an external focus that isn't there in the same way before the IPO.
Yep, exactly. And, I would just add one more specific technical thing. A lot of us think about what, these sell side analysts when they're following companies that they are perfect in their modeling, right? And they're perfect in their understanding. I had that false understanding where, they understood us really well. But I will tell you a time where our consensus was so skewed that, how could we be so far off in our forecast versus consensus? And, looking at their models, there were just formula errors. And so just by going and pointing out formula errors to a sell side analyst changed consensus to where we were fine. Right. I guess I would say is really, your IR function will get to know your sell side analyst, really well.
Sure.
But if you know your model well, and you can look at their model and see, issues with it, it'll, pay huge dividends for you in just being able to manage their expectations.
Sure. And I think if you know the business well, you should be able to pass the sniff test when you look at a model.
Yeah.
If it doesn't, then it's a question of why, right?
Yep.
Is it an assumption that's off, or is there some kind of formula mistake? And we've seen both. And sometimes it is a combination of both. Right?
Yeah, it is.
So usually, often it's, a little bit of both. All right. Well, no, I really appreciate that on the IPO. So kind of moving on, I know, HealthEquity did a number of acquisitions during your time there. I know WageWorks was one of the biggest they did, and they did a few others in different areas as they kind of consolidated and grew in the health benefits industry. So maybe can you talk a little bit about the due diligence process? I know you went through that a few times, a little bit about the process, and then maybe just some advice you would offer to other FP&A people that are either going through or going to go through that process.
Sure. So I would say from a due diligence perspective, it depends on the organization, right? There could be a corp dev, organization that's doing all of that. And I would just say from that perspective, if there's a corporate development group that is, looking at companies, vetting companies, entering into IOIs, entering a due diligence, get close to them, right? Have regular one-on-ones, see how you can get, if you're not involved in due diligence, because typically, you don't want everyone in the organization to know that you're doing an M&A deal, and you don't want everyone in the organization to be distracted, right? Because a lot of these deals don't happen, right? So you don't want to waste time, and you want to focus on your core business, all those good things. But if there is something that where you can get, quality of earnings reports, or get access to a data room and look at their model, things like that, where you want to get involved as an FP&A person, because typically what happens is corp dev will go and do due diligence in some deals, and what could happen is they can just finish the deal. Everyone says, yay, they throw it over the wall, and the FP&A is left with, okay, what am I supposed to do with this model? One, the model for sure won't have been built to maintain and update, right? That's typically what I've seen is, it's cool to build all these fancy models, but to actually maintain the model and refresh it on a regular recurring basis is where it wasn't built for maintenance. And so, that's one thing that I would, caution everyone to be thinking about. Secondly, when consultants are then input into the process, they don't know your business as well, right? And for example, I've been in an environment where they might be thinking from, let's say, an earnings perspective, but earnings is defined differently by every company, right? Like every company might think of it from an EBITDA perspective. Some might think of it from a net income perspective. Some might think of it from a free cash flow perspective. Whatever that might be, I found that was, that the base definitional phrases weren't always aligned, and they're doing due diligence based off of different definitions, right? So getting aligned from that perspective is huge. But the biggest thing that I can say is you want to make sure that model in your due diligence has at least been reviewed by you, because there's so many times where I wish I would have at least just had the opportunity to really have a really good scrub of it to say my piece on certain areas, right? And highlight risks or opportunities from an FP&A perspective, because I'm trying to walk a fine line of certain deals that have happened. I don't want to say too much. I don't want to
Sure.
get in trouble. But
Yep.
But you want to plan for the unknown in deals, right? So there will always be good guys and bad guys, right? There's going to be things that you will not find in due diligence.
Of course.
And have you appropriately planned for those unknowns? And then for those unknowns, does everyone concur and agree with, okay, like we're going to be planning for these unknowns? And that's getting that understanding and baseline understanding across the M&A team, due diligence team, is something that is difficult to do. But even if you just try and say your piece and be able to review things beforehand before it's tossed over the wall, that is where I would say start there first. Secondly, sorry, I've probably said so many different things. I'm not on secondly, but maybe I'll say lastly is when you're doing an M&A deal, depends on the type. If there's synergies being planned for, if there are synergies being planned, I would say make sure you are all in agreement of what the baseline is and what a synergy is. Those are so key in doing an M&A deal after the fact, the day two, when you are ready to integrate and actually start merging these two companies together. You want to know what the baseline was, and everyone is in agreement of what the baseline is, the time, or what it looks like that you're measuring against for in perpetuity. And then what is a synergy? Not everyone is financially minded in the business that's going to be putting these companies together. And you want to make sure that what they think is a synergy is what you're going to be counting as a synergy. And so those would be my last words of advice for any M&A deal.
No, lots of great advice there. So just kind of to add a few things to that, many companies obviously have the corporate M&A. So the enrollment of the involvement can be very different, right? Mm-hmm. For FP&A, depending on the company. Sometimes FP&A can be the ones building the model. Sometimes You're just reviewing it. Either way, you want to make sure you understand the assumptions that went into it. Like you mentioned, you want to make sure that you realize the model you're getting is a deal model. And there is a big difference between a deal model and an operational model that you need to roll forward.
Yep.
And so you need to be prepared for that, whether it's if you're involved in making it, trying to think through some of those things so you can do it, or at least having reviewed it so you can start thinking, when I get this on day two and they want to update these assumptions, how do I do it? Mm-hmm. Right. So I think that's great advice. The other I really liked is you're going to miss stuff in the due diligence. So, be prepared for that. Make sure you align on the unknowns, the baseline, and synergies. Because, sometimes deals get sprinkled with a lot of synergies. And you look at it and go, okay, how is that achievable? So being willing to raise your voice before you get something and go, well, that's not possible. Because, the reality is most deals don't generate what people assumed they were going to at the time they did the deal. So the more realistic, I was going to say skeptical, but realistic you can be, the better. Because it will save you a headache down the road to explain why you have big misses, which are never fun.
Nope. Learn from the mistakes of others, right?
Yeah, exactly. I mean, others have been through it. And I think that's great that people reach out to you on LinkedIn. I'm not surprised because, lots of companies, as they want to go to IPO, that's often a new experience for somebody. And it's a scary experience, right? You're kind of like, how am I going to get through that? So, the M&A and all that, just learn from others. So now we're going to get into a little more what I would call kind of advice for people, a little more hard into FP&A. We've talked a little bit about IPO, M&A, a little bit about you and your background. We're going to switch gears here a little bit. So, I know you've had a couple different roles in FP&A and had some teams. So how do you think about structuring a team for FP&A? Do you have a way you like to structure it? Like someone comes revenue, expense, kind of any thoughts just in general for somebody kind of, in a management role and structuring a team? How do you think about it?
Yeah, no, you did a good intro on that question, because that's exactly how I like to think about it. Revenue is huge to any organization, right? And you don't want to get that wrong. Whether it be from just a peer review standpoint, telling the story, the forecast, there might be a lot of projects where management might come to you and say, hey, like, how can we really juice this up, not from an unethical perspective, but like, what are the opportunities here, right?
Yep.
And you need someone sitting on that, and it could be a team. And so I've had a revenue FP&A team, that's their focus, and depending on the organization, it might be, they might include the margin as well in that, right? So the revenue and the COGS, or revenue and direct expenses might all be in that team. Depending on the organization, it might make sense, might not make sense. That's where you have to be flexible as an FP&A team and just be very collaborative and discuss things with one another and know that there's no lanes, and this is my lane and this is your lane, right? You can't have that mindset in FP&A. And then I like to think of it as the business partners. And I know that's a big, theme in the FP&A realm this day. Or as I like to call them, the mini CFOs of the business, right? So they're the individuals, and their title could vary, right? Could be financial analyst, senior financial analyst, finance manager, whatever, the typical career path might be. Based off of experience and knowledge, but they would be the dotted line to whatever executive within the business.
Sure.
And this is the difficult part of workload and trying to figure that out, because some areas, some executives are more needy than others, but yet their budget might be very small.
Yep.
Or there might be some very large spend areas that are pretty simple in nature. So number of third-party vendors and complex vendors like the IT realm, that would, require more time to understand the contracts and the timing and things like that. And there might be areas that are, variable headcount in nature, which are more difficult. And there's this complex staffing model. So you have to really just be, communicative with your team on how to really assign those duties, right? But what I've noticed is those assignments are changing. When you do find a good business partner and executive fit, like, you don't want to change that, but you do have to reconfigure some things at times. So the mini CFOs are the business partners, and they're primarily expense driven. And then I start thinking about projects and systems. So you mentioned, we talked about just previously that there was a lot of M&A activity at HealthEquity. Having someone that was M&A focused from a due diligence, process, so I could put someone on the due diligence team so that they could be hearing all the conversations and, being an early warning side. Hey, this is what I'm hearing. Let's make sure they understand from our perspective what, those type of conversations. But also on the integration front, there's so much time required from an integration standpoint for an FP&A that, having someone dedicated to that was key. And then as you get bigger, a systems, type individual, someone who can go sit on those, ERP roadmap discussions. I know there have been, a lot of discussions about the, different systems that are out there. But when you find a system that you can use for planning, there might be someone necessarily dedicated to that. So M&A systems would be another area of, the verticals, so to speak. So the verticals could be revenue, business partnership, M&A or project related, and then systems is kind of how I would break it up or think about the team.
Sure. No, I like that and I appreciate it. And, like you mentioned, every organization's different and it changes as you grow. And I think I'm sure you saw a lot of that. Like you mentioned systems, early on you have your ERP and then you're often starting in Excel, and then you start to grow and say, okay, now I need a system to support this planning process. Right. And then, we need an analytics tool. Do I put in Power BI? Do I put in Tableau? What do we do here? And it explodes if you're not careful. And, more and more FP&A departments and finances owning analytics. Not always the case. Sometimes it's separate, but that's just such a critical as the data continues to grow of getting that right. So I, appreciate being able to have somebody to focus on that. I think that's really important. And like you mentioned, revenue. Sometimes it includes COGS. You're going to have your business partnering, your mini CFOs. And sometimes one hat's wearing all of that, depending on the company size. And sometimes it's many. And sometimes you have a whole corporate team, and then you have business units. And right. So you just got to think through it. What makes sense for the business and what makes sense for the point the business is at and where it's going to be in 18 months. Like you mentioned earlier, trying to hire for what you need in the future, not just what you need today. So you're not left short in 6 months and trying to justify another person, and they don't want to give you that support. So, no, those are great. I appreciate that. Some good advice there. So what would you say, as you look at the FP&A landscape today, what do you think the biggest challenges out there for FP&A professionals?
Yeah, I know it's a really good question. I think I've had a lot of conversations recently with a lot of different companies and understanding their processes and also understanding, with different business leaders within the business. And I would say, and flexible and easy to maintain tools and FP&A are key. And I feel like there's a lot of confusion in the marketplace as far as what that is, right? And so you can go a lot of different directions as far as a tool is out there, but most people are confused and not quite sure where to go. Excel will always be an option for companies, but it's limited in its capabilities from collaboration is what I hear a lot. Version control issues. How many times they don't want to be sending this spreadsheet back and forth between the analysts and themselves and things like that. And even Google Sheets, right? Yes, it solves collaboration, but it has its own inherent issues. And so I think trying to find what that what that solution is for the organization it will be helpful just so to get that off the table, right? Yep. And let's start actually talking about the business and where it's going, and not worrying about a system and like how to actually work with each other, right? So that's just a roadblock in of itself. I think there, in FP&A, such a huge quality for an individual is just someone, like we were talking about, if here are the guidelines. I need you to go to the top of the mountain. I don't care how you get there. I just need you to get there. Right. Or I've heard it in a different term as, I'm stubborn on vision, but flexible on journey. Right. So someone who understands that, and, you can find people who can get bogged down where they feel like they need to follow the process of A, B, C, X, Y, Z, whatever it might be. And that's, but you want to get the right people in FP&A that can, they know that they need to get to the mountain. And if they have to add a switchback here and there, they'll figure it out and they'll get around that obstacle. So I think it's really building out the skill set in FP&A to build that, the knowledge base, and also the skill of working in a lot of different environments that don't have SOPs and predetermined, environments. So I say the talent would be one. And then, going along with the planning tool system perspective, you mentioned the analytics tool, but I would just say it's the whole system map or ecosystem, yep. Right? So the ERP doesn't really work well with the planning tool, or the HRIS system doesn't work well with the planning tool. So it's that whole dynamic of just the whole systems map and all the different data sources, yep. that we've got to figure out. And so those would be, two of them were systems related. One planning is planning tool specific, the whole ecosystem, and then just the talent base of the FP&A organization and building that framework, but also that mindset of the individuals in FP&A.
No, I think you hit on the nail on the head on a couple of things. Getting the tech stack is so important right now in FP&A today, is getting it right. And that doesn't mean you have to use a certain tool. There are lots of great tools out there, but you need to understand what you're trying to accomplish. Like you said, flexible on the journey, but rigid on the vision. Mm-hmm. What do we need this to do at the end? How you get there, there's dozens of ERPs, there's plenty of analytics tools, there's always Excel and, mm-hmm. other pieces to that, but it's figuring out how to get there today and how to get there for the future. And then talent. CFOs have mentioned, there's some surveys out there over the last year that the role that's hardest for them to hire right now is FP&A. And if you look, I saw an article that said the number of skills in just 2 years that are listed on the average job description for FP&A over the last 2 years has grown 20-something%. I think it was like 23 or 25%. So there's two or three more skills listed on the average job description than there was just 2 years ago before the pandemic. Yeah, which tells you how rapidly it's changing, right? It's a real challenge. Yeah. So I appreciate that answer. So here's kind of a little more, get a little more personal, ask you some questions here. We just got a few more to go and we'll kind of wrap up. But as you look at your career so far, what would you say is the best achievement of yours? An answer you would give in a job interview as an example. What would you say?
Sure. I would give two, one from a leadership perspective and a people perspective. And I'd give one from more of a technical perspective. And one from a leadership perspective is, there's one individual that I've been a mentor and a coach to, and just seeing his progress of where he started and where he is now. He started in as a, an hourly individual, entry level, and now as a director level. Mm-hmm. And I just, I'm glad I could be on that journey and be part of it. It's all his effort, but I feel like that's the biggest accomplishment is people interaction and people facing that, for my career. Sure. From a technical perspective, it would be that, HealthEquity has and had a run of 32 consecutive quarters of meeting or exceeding EBITDA consensus. And so that, there's a reason, the business, but also just, planning and forecasting and guidance. I used to have hair, but it's taken a lot of effort, but that's something I'm proud of. And then just on that as well as during my tenure, there was never a time where we paid less than the 100% bonus pool. which is also, if you think about bonus targets, they're set on, your operating plan. So meaning that you're hitting your operating plan targets, and so that you could pay out. And that, I feel proud of, just because it impacted so many different people from a financial standpoint, that I feel like, I was part of that.
No, that's great. And that's an awesome accomplishment, 32 straight quarters. It can be tough to do, especially when they want growth. And it's not like it's easy to sandbag to the street, because you have the analysts and everything else looking at things, and they generally have an idea of what's going on. And I love the first one on the people side. There's nothing better than watching someone develop and grow and feel like you played a small role in that. You realize they have to do the work, but just being there for them, it's very rewarding. So I really appreciate those two answers that you gave there. So what would you list as maybe the most challenging experience you've had in your career?
You will always make mistakes in a forecast, right? Like, accept that fact, right? You will always make mistakes. And they always relate to making like pretty large mistakes in a forecast is what I would say. There's several I could list. One as an example, early on, I remember I was doing an EPS forecast on the share count. We had a pretty complicated calculation. We had two-class method for all you accountants out there. So it was complicated to get the denominator right. And I remember looking at it after we had already given out our guidance and things like that. And I'm like, this is not right. And I did not sleep that night. And I was like, should I just give up? Should I just not show up for, everyone goes through those irrational, thoughts. And I called up the CFO, the next day, and just explained it to him. And his reaction was something that I will always remember, and I will try to remember. And he just said, "Okay, we will figure it out, and we'll work on this together." In the long story, nothing happened. The business outperformed what it needed to do to even to cover any mistake. It wasn't even an issue in the long run. But I remember feeling so much anxiety and like just down on myself for making a mistake. But I really appreciated that CFO and how he reacted. He could have yelled and flew off the handle and reprimanded me in a lot of different areas, but the way he reacted in a cool, calm manner and acting as if we were on the same boat, that we were on the same team and we'll figure it out together, was a lesson that I will always take with me as a leader.
No, I appreciate, and I love that. I love your point. Forecasts are always wrong, right? They're a predictive tool, and we're going to always make mistakes. I still remember the first subscription forecast I did. I hadn't been given very good guidance at all, how to build a whole new model, and I didn't take seasonality into consideration with the cancellations. And let's just say we came nowhere near hitting our numbers that year, and it was brutal. I learned a lot, and fortunately the new CFO we had come in was very understanding, and we worked together, and I became good friends with him, taught me a ton. He was kind of a leader like you mentioned there, but it happens. You own it and you move forward. It's all you can do. If you hide it, it never turns out well for you.
Nope.
So, that's any advice I'd give to somebody young in your career. When you make a mistake, just own it. Tell them what happened, be honest, and move on. And come with solutions when you can, so that they know that you're not just coming with problems.
Yep. So, confront the brutal facts, right?
Yep. No, that's a great way to put it. I like that. Confront the brutal facts. All righty. So here we're going to get a little personal. What's something that not many people know about you? Maybe something they wouldn't find online if they looked at your LinkedIn profile or other social media platforms.
That's a tough question. It's a tough question to answer. Well, on a personal side, I have 4 boys, and I am one of 4 boys. And my last boy, he was due on my birthday. So I was the I was the 4th boy, and my 4th boy was due on my birthday. Life has an interesting pattern. So pretty interesting. I always thought I would have 4 boys, and it actually turned out true. So But on a more, unique perspective, I'm very into emergency preparedness. So I combine my Excel skills with my emergency preparedness. So I have a model on my emergency preparedness where I can tell you, you know, how many calories, if my family were to eat intake, how long we could last with my current stock supply. I have an inventory, module of, how many, when the inventory came in and how, its life, and, all sorts of labels on it. So it's kind of a fun, thing for me to just to know, like, that I'm good. So it's my everyone buys life insurance and car insurance. I buy that as well, but I also have insurance just for the unknown, and from a food storage perspective. So
Well, great. I mean, it's always good to be prepared for those emergencies, whether it's a job loss, natural disaster, human made calamity, whatever it may be. All we have to do is look around the world today and see all the uncertainty to know that being prepared is helpful. So that's a great thing to share, and it's a good thing to have. I can't say I have a module or that level of detail on it, but I think that's great. So alrighty. So next question here. What's your favorite Excel function? Since everybody in finance has to use Excel pretty much, what is your favorite function and why?
yeah, that's a great question. I wish I had a favorite Excel function. I don't. The principles of Excel that I like, well, first I would say is I like quick keys, so shortcuts, to make things quicker, so you don't have to touch the mouse as much. So those would be my first, preferred things on the list.
Okay, so what's
And then,
real quick, what's a little known shortcut you like? Maybe one that's not as common. Do you have one you can think of?
well, I mean, just setting them up at yourself at the top of the, oh my goodness, at the top of
The
Excel
toolbar.
toolbar. Yeah. Where you can, almost customize it yourself. So, that, I might have customized it myself to where for my preferences. So I don't know if I necessarily want to quote one that I've set up that, might give
Sure.
others pause. Just control left open bracket, just, to follow, formulas.
That's a lifesaver.
That's a lifesaver. Yeah. I mean, I can't really think of it. It's one of those things where when you have a shortcut, you don't actually think about what the actual shortcut is, once you've learned it so much. Like, I don't even think I could quote a lot of the shortcuts that I use because they're just now second nature to me. Right. So sorry to not have a specific one.
No, that's totally fine. Funny
That.
story on the shortcuts. I worked with a guy that he said he worked in investment banking and he had done so many models that when he kind of stopped doing that, he would sit at the table and his fingers would make the movements, just kind of tapping on the table for different control functions because he had done it so long, like just subconsciously.
Yeah. Yeah. No, I
So
believe it. I mean, yeah, I don't think I could quote you the actual keys now. It's just second nature. I have seen certain individuals that have, don't need to touch the mouse. I'm not to that level at all, although I am very envious of that skill. As far as Excel, continuing, I am a big proponent on making the functions in a model not overly complicated though. So, how many times have you gotten a model where someone built it, they left the organization, and now no one knows how to maintain it? That is, one of my pet peeves in the FP&A realm. And so, index match, sum ifs, those are all fine. But once you start getting into complex macros and things like that, where, the next person might not know how to maintain, I start to pause and just think about it. So if we're building a one-time model, I'll ask the question, like, will we have to maintain this thing? If so, like, we need to simplify this. So those would just be some principles, like how I think about Excel. So, I might not be the best at the super complex formulas, and that might be a reason why.
no, I mean, as I once heard it said is, complex is easy, easy is hard. It's easier
Yeah.
usually to build a complex model than to really do the homework up front, think through how to make it simple. I've been guilty of it on more than one occasion, so I can really appreciate that. It's an important skill that takes time to learn.
Mhm.
So
Yep.
last question here. I've really enjoyed the conversation and just kind of have one more question here before we let you go. So what advice would you have for our audience if they asked what they should do to become a better FP&A professional?
Sure. I mean, this might sound cheesy, but I feel like I have learned a lot just through validation, just by following a lot of individuals on LinkedIn. Before, I thought I was, in the boat all by myself. I knew that was an irrational thought, but I just didn't know if other people were having the same issues as me, and were seeing the same things. And Paul, you were one of those first individuals where I found on LinkedIn, and I was like, yes, like he's going through the same thing as me, and like he's learning these things. And just reading that different content has been so eye opening for me. So I would say is find some of those FP&A influencers on LinkedIn. I recommended recommended a lot of them to my team, and they said it has been very helpful. So start seeking out the content, right? And seeking out individuals that are going through the same thing as you. Either that's individuals that are trying to get into FP&A or true FP&A individuals, and just learning from them. There's so much more content out there to learn than there was 10 years ago. And YouTube, these podcasts, LinkedIn. I would just start absorbing. And then the second part is, the first question we started off with is just start doing it, right? Just start digging in. Even if there's an FP&A group in your area and you're not in FP&A, and let's say you're in accounting, you have access to all the information you need, and you could start analyzing things off to the side, and eventually you will show your value. And so I guess that would be the advice that I would have for everyone, is that just start doing it.
Well, thank you. That's great advice. And I mean, I think you've given a lot of great advice to our audience. I've really enjoyed the podcast. I agree with you. Great content, hoping this podcast adds to that and that people learn from it. I know I've learned from you today, and I'm sure our audience will learn from you, and look forward to seeing you develop and kind of grow in your career, and hopefully sometime down the road we'll have you on again. But I really appreciate your time today, Cameron, and for what you gave our audience. So thank you.
Thanks, Paul. Just appreciate the conversation.